Welcome back to Home Chat. With me today is Cotton Baldwin. She's a loan originator with Motto Mortgage Masters based in Evans. And Cotton is gonna spend some time with us because one of the first questions I get asked as a realtor is what is the first step in the home buying process? And for all buyers, that first step is speaking with a loan originator to get pre-qualified for a loan. Now, there are all sorts of different loan types. There's about 5 of them generally that apply in this market. So what we want to do is spend some time breaking down each of those loan types so that you're more informed as a consumer of that loan, and it helps you make a decision with your loan originator about what kind of loan you're going to go with. So we're going to do a series of episodes breaking down each loan type. And the first one we're going to talk about today is the conventional loan. So tell me a little bit about a conventional loan.
So when people apply and think about conventional, they usually think I need 20% down, and that's really not the case. So if you're wanting to put down 20%, you do get rid of the mortgage insurance per month that's required. But if you don't have 20%, you can put down as little as 3%. So 3% is for first-time home buyers, which can be anyone that hasn't owned a home in the past 3 years. And then if you have owned a home in the past 3 years, then you can put down as little as 5%. So
that's awesome.
with those options, you do have mortgage insurance per month, but it's still a great option. And then with conventional, your mortgage insurance will fall off at 78% loan to value, and you can request it to come off at 80% loan to value.
So tell me a little bit about what mortgage insurance is.
Okay, so mortgage insurance for a conventional loan is a payment that you're paying in each month with your mortgage payment. The amount that you're going to pay kind of depends on some different factors. Some lenders, if you have a larger debt to income ratio, they might see more of a risk, so you're going to pay a little bit more mortgage insurance per month. Others have pretty low mortgage insurance, so it really kind of just depends, and we can shop around with multiple lenders and let you know what the best options are. And you will have that mortgage insurance monthly until you reach a certain loan to value.
Okay, so what is that loan to value amount?
Okay, so you have to hit a loan to value of 78% for it to drop off automatically. Or when you reach 80% loan to value, you can call your lender and say, I've made my payments on time. I would like for my mortgage insurance to drop off if you will let it, and they'll evaluate everything, and then they will take it off.
So basically, from the lender's point of view, once you have paid enough money in that you have 20% equity in the house, you're entitled to drop that additional mortgage insurance payment.
Yep.
And so the different loan types have different credit score, like minimums that you have to be able to be approved for that loan type. So what is the minimum credit score, or what does your credit score need to look like to be approved for a conventional loan?
So with conventional, you want to usually have a 620 or higher. Now with the lower credit score, on the lower end of that, just say 620 to 650, 660, you're probably going to have a higher interest rate with conventional. But anything above 620, 750, 800, you can qualify for a conventional mortgage.
Okay. So how does that differ? Let's just compare that just very quickly. We'll get into, let's say, an FHA loan in more detail in another one. Mm-hmm. How does that compare to an FHA loan and the credit score you need for an FHA loan?
So with FHA, you can get an FHA loan 580 or higher. So especially with borrowers who their debt to income's kind of close and they need a lower interest rate to be able to afford more, sometimes going FHA is better because the interest rate is lower, which makes their payment lower monthly.
Okay. So do you think that there's a distinct advantage if you have the credit score and you can afford the higher down payment? Do you think there's a distinct advantage to going with a conventional loan if you can afford to do that?
Yeah, conventional would always be the best way to go because you don't have the upfront mortgage insurance premium like you do with FHA, which we'll get into. And then of course, your mortgage insurance drops off at a certain point. And with FHA, if you don't put down 10% or more, you have FHA, the mortgage insurance premium or mortgage insurance, for the life of the loan.
Yeah.
So,
and
conventional, it's going to drop down.
Yeah, and that changed recently, didn't it? It used to be on an FHA that the mortgage insurance could drop off, but now it's for the life of the loan.
Yeah, unless you put down a certain amount.
Right, unless you put down a certain amount. Now, you see, these are all the fine details of the different loan types and how they work and why it is so critical that you speak with a lender and get your pre-approval before you even start home shopping. So we're gonna sort of wrap up the conventional loan type now, unless you feel there's something you want to add about the conventional loans.
I don't think so. It kind of just depends on the borrower and their situation to credit history, owning a home. A lot of stuff goes into it. So I would suggest reaching out, making sure, your lender knows your situation, knows your, background, financial situation, and they can kind of let you know what the best way is.
That's right. And realtors, we don't have your big financial picture the way your lender will have that. So they're really the most qualified and the best people to talk to about the kind of loan that you can get and what your pre-approval amount is. Okay, so next up, what are we going to talk about in the next one?
Let's do FHA.
Okay. So when you see us again, we'll be talking about FHA loans.